So understanding the option chain is important. So let's take a look. Let's get into the basics of the option chain. So you may have an option chain that is very similar to this one. It may be a little bit different in color, but the setup is probably the same. And this is the SPY, S-P-Y, S&P 500 ETF. And it has an expiration of about 3 days. In other words, these options will exercise or expire within 3 days. And so what we have here is the shaded areas, which you probably have a shaded area too, but it could be a different color. And on this side are the calls. And the calls mean we feel the value of SPY, the stock, will go up. And over here are the puts. And for the puts, we feel the value of the stock is going to go down. And right here, this midline is kind of the break-even point. It's the delta 50 point, which is kind of the mid-range. And the area above in this shaded area are options that have intrinsic value. The same down here for the puts. These puts have intrinsic value. So in other words, if, for example, the SPY was at, on the dot, 363, and the cost of the option was $2.83, and of course we times that by 100, and that would be $283 if we wanted to purchase this option. The premium for this option would be exactly $2.83 if the value of the underlying stock call or underlying stock was 363. So if we go up $1, then we know that the intrinsic value is $1 or $100. So if we subtract $100 from $337, we know that the premium that we are paying is $237. Now this premium goes up as we get deeper into the money, and the premium goes down as we go out of the money because these don't have intrinsic value. So all you're paying right now is premium for the opportunity, for the possibility to buy a call for $153 if we think that there's going to be a significant move in the SPY. And this would be, say, a $4 move, 1, 2, 3, 4, would put us at 337. And that would then have intrinsic value. Or the other way around. If we feel that the SPY is going to go down in value, we would buy or purchase puts, or a combination thereof. You can buy and sell calls and puts. In this case, where we bought the $153 call, we think it's going up, and this is a directional buy, meaning we're just buying the call. If we bought, say, a put at the money because we think in the next day or two it's going down, well, then we're going directional down by buying the put. However, if you don't know which direction, you can buy a combination of calls and puts. Now, we focus on a few different types of strategies. You can have what is referred to as a common straddle, which is meaning we're going with the strike price right about at the money. We would buy one call, one put, and then hopefully within time, the move in the underlying security would be enough to cover what you paid in premium and more, so you would have a profit. And there are times when a straddle is the right choice or directional is the right choice. However, at SPY Tomorrow, we generally use what we refer to as SPY T trades. And really what they are ratio trades, including straddle ratio trades. Let me show you what I mean. If we were going to implement a SPY T A trade, we would buy 2 calls just in the money. And then we would buy 1 put just out or in the money, usually about the same value. And in this situation, they are about the same value. So 2 calls at 363 strike and 1 put at 363. And these are overnight trades, so we would buy them at the very end of the day, and then we would sell them usually within the first half hour of the trading day the next day. If the SPY tomorrow indicator says it's going to be an up open, again, we'd buy the 2 calls and 1 put. However, if the SPY tomorrow indicator said, hey, it's going to go down tomorrow, the pressure right now is showing down, well, then we would buy 2 puts and 1 call. The SPY TB option trade would be 1 call in the money, and then we would find a put about half the price. So this is around $3. So maybe the 360 put would be a good option. Another way we approach it is the SPY TC approach, where we look for an option at a specific price and then look across from it to see if we can find an option about half the price. And that's what we have here at the 361. It's $396, and about half is around $200 or $192. So this one works. Now, it's also important to know this is 3 days out, and so the theta is moving down quickly, the time decay value. So if we wish to protect ourselves, we can go out 5 days or 7 days or further. But you'll also notice that the premiums are much higher, maybe about $1 more. So if we were going to do a SPY TC trade, we would look at this $6 360 call, and about half price here is the put at 360 at $3. And the regular SPY T trade, if we were thinking the market was going up based on the SPY tomorrow indicator, 448, we buy 2 of these and 1 of these puts at 363. There are many combinations in which you can buy or sell options, and there are many indicators that you can use to buy and sell your options. So let me explain a little bit further exactly what we do at SPY Tomorrow.
At SPY Tomorrow, we like to keep our trades as simple as possible, but we are directional, meaning we use an indicator to decide which direction we're going to lean. Either the underlying stock, usually SPY or QQQ or IWM, is going up or down. And we use what we refer to as our SPY T trades. And we also go directional in certain situations. Now, there are 3 parts to a SPY T trade. First of all, it's a swing trade, a short-term overnight swing trade. We buy our combination of options at the close of the market, and we sell first thing in the morning or over the next half hour. Sometimes we will continue our trade into that first half hour. If it is moving in a specific direction, maybe we can increase our gains or decrease our losses in the days in which the SPY indicator is incorrect. Now, the 3 types of trades are the SPY TA, SPY TB, and SPY TC that we currently regularly use. Now, we have that overnight swing trade. We use these different types of trades, which are ratio trades, meaning 2 to 1. So the SPY TA trade uses a 2 to 1 ratio of buying 2 calls at the money and 1 put at the money. Now the SPY TB trade buys a call assuming that the market's going up in the money, and then a put about half price. The SPY TC trade is very similar to the B, except we go a little deeper into the money and we find a call and then an appropriate put that is about half price at the same strike price. If our indicators say down, then we would reverse that. In the case of the SPY TA trade, we'd buy 2 puts to the 1 call and vice versa with all the others. And we use SPY Tomorrow as our indicator. It's available free on the front page, either up or down or neutral if the algorithms are mixed. But you can use any indicator you wish, maybe a technical indicator that you like to use. There are a number of different ways. Twitter, if you want. If you feel that everybody is saying it's going up tomorrow, then hey, use that. You know, maybe there's a correlation there. I don't know. Take a look, test things out, find out what your best correlation to the opening is the next day. And you know, you can test as many different types of indicators as you wish and use a combination of indicators to make your trade. So if you have questions, put them in the comments below, and I'll see you in the next video.